Thank you for joining me. I'm Alex, and I want to talk about Bank of America today. And it's mostly because they had a rough couple of weeks, but obviously yesterday or Friday was a pretty good day for the stock market. As you can see, up quite a bit, best day ever, So let's have a look and see whether or not we should be buying it. So what they do is banking, shockingly enough. Current price is $24.16, which gives them a market cap of $211 billion. I actually own Bank of America, and I bought it for $31. So obviously not a great thing right now, but we'll see how it works out. Dividend yield 3.51% with a payout ratio of 24%, which is definitely not terrible. Revenue $91.2 billion, which is down from $91.2 billion. It's 91.244 versus 91.247. So very marginal there. Earnings $27.4 billion, down from $28.1 billion, also down marginally, although that marginally is 2%. PE of 10 is not bad. Forward PE of 9 is also not bad, but it's also in line with where most big banks are right now. Like if you have a look at Morgan Stanley, JP Morgan Chase, Goldman Sachs, Citigroup, they're kind of all in line there between 9ish and 12ish. Total assets $2.4 trillion, which is slightly down. Total liabilities $2.2 trillion, which is slightly up, which gives them a total stockholders' equity of $265 billion, which is slightly down, but not significantly. Definitely nothing to write home about, obviously. And as you can see, again, their stockholders' equity is actually higher than their market cap. Which is always, for the investor anyway, a good sign, because technically you're making money just by buying the company. Now, the main problem that I see right now is that Saudi Arabia kind of started a price war on oil, which kind of could, or rather the point is, I guess, to bankrupt American oil companies. And if the big banks have a lot of loans for oil companies, then that could be a problem later. So overall, and in summary, I would say that I'm not buying Bank of America right now. I'm also not selling it, but I'm not buying Bank of America because I don't know how much of their money they lent to oil companies and how much of that money could be going down if the price war continues over the foreseeable future. And right now, oil companies are very vulnerable because obviously with the whole panic right now, cruise lines kind of shutting down for a couple months, air travel kind of shutting down for a couple months. The whole thing is not doing great in the first place. And then Saudi Arabia and Russia couldn't agree on cuts to supply, and Saudi Arabia kind of went with it, I suppose. Instead of cutting their own supply, they just rode the price down, I guess, and that could be a problem, especially since oil companies in the US can't really compete with the production at the same price. So overall, depending on how long this goes and whether or not people can agree, there's a problem for companies like Exxon or Occidental or all of the others that could be a problem with their production and their profits and their money. So I don't know how much Bank of America has in oil, and that's why I'm not buying right now. If it's a minor amount, I think that it would still be a safe investment. Like if out of their $2.4 trillion in assets, maybe $200 billion are in oil, then I wouldn't really have a problem with it. I would still be investing in this, but I really don't know how much it is, and so I'm not buying it. But For a dividend investor, I think 3.5% dividend with a 24% payout ratio is pretty nice. And for a value investor, the PE looks nice. The balance sheet looks I mean, it's a bank. Balance sheet also always pretty much balanced. So still, there's a dividend. PE is nice. Balance sheet is So I think it's a pretty decent buy. For a growth investor, there's nothing here for you. But, there's many other opportunities out there. So that's it from me for today. If you like this video, make sure to subscribe and come out with more videos every day before market open. I hope you have a successful day.